What's up, good people? How you doing? This is Larry Jones. I guess I had the time off on this live. All right, but hey, we're gonna just go. All right, we're just gonna go. We're gonna go with it. All right. So it is. Yeah. Hopefully, I'm okay with time. It's supposed to be. If I'm not, then I'm an hour early. Somebody let me know if I'm an hour early. If I'm an hour early, this is going to be the longest live I ever did. Guys, can you hear me out there? Let me know if you can hear me. There we go. There we go. Good afternoon. Good afternoon. Good afternoon. All right. All right. All right. Hey, hopefully FOMC decision coming. What time is this decision? Schedule 12. Okay. All right. Good people. We just gonna talk. I'm live now. I can't go back. I can't go back. All right. Uncle Larry. Yeah. There we go. 30 minutes before. Man, this is gonna be the longest live ever. I made a mistake and came on too early, good people. We got a lot to talk about. If you're new to the page, go ahead and hit that like, subscribe, and the notification bell. This is Stock Up with Larry Jones, where I came in early. Hey, someone ordered the coffee. You ordered the coffee? All right, in 2 weeks, what coffee is he talking about? He's talking about the $1 million cup of coffee. You're going to love it. Everybody loves the coffee, okay? And then you'll be able to order the 12-ounce bags in about 2 weeks. Hey, what's going on, good people? Hey, yep, hey, okay, all right. So, good people, instead of being late, I'm early. I'm early for the FOMC meeting. Wait a minute.
Confidence that inflation is moving sustainably toward 2%. The economic assessment suggests a slightly weaker labor market, noting that since earlier this year, labor market conditions have generally eased and the unemployment rate has moved up, but remains low. Still, the statement repeats September's view that risks to achieving its employment and inflation goals are roughly in balance. The rate cut today is in support of its goals instead of September's in light of the progress on inflation and the balance of risks. Policymakers note again they will consider additional adjustments to their benchmark rate, but offer no further guidance beyond that. There is no mention of politics in the statement. That will be up to Chairman Powell in about a half hour.
And Mike McKee, it'll be up to you, sir, to ask the questions. How many questions do you expect are going to be leading with the events of this week and not this decision? How much of this is going to be about the politics at 2:30, Mike?
I would imagine quite a bit would be, and maybe we want to check the Las Vegas over-under line for that. But he's not going to say anything. He's not going to respond. So the question is, how many different ways can we ask, and how many different ways will he parry the question?
60 minutes of that. Looking forward to it. Michael McKee, you've got to run. I know that news conference begins in about 28 minutes' time. So no big changes to the statement. 25 basis point rate cut as expected. And when you see something like that, you're not looking for a big change in the market either. We stay higher on the S&P 500 by about 0.6%. Yields are still a little bit lower. On a 10-year, we're still down by 8 basis points, 4.35. And in foreign exchange, the euro gives up a little bit of the move, but still positive on the session. Lisa, 107.84 on euro dollar.
I think it's interesting that the Federal Reserve removed a reference to gaining confidence in inflation and saying that labor market conditions have generally eased. Honestly, to me, you're looking at this and on the margins, just setting the stage to potentially be a little less dovish. And that is the tone that I really am curious to hear in the press conference.
With us around the table, Bob Michael of JP Morgan, and a man who's seen it all before, the former Fed Vice Chair, Rich Clarida. Rich, I want to start with you, and not on the 25 basis point rate cut. You lift the tariffs of Trump in Volume 1 on the Federal Reserve. How did you handle it then? How much scenario analysis did you do ahead of time? How do you think this chairman's going to handle it in the months to come?
Well, the staff did good work, and some of that's in the public domain now, comes out every 5 years. The reality is, during my time at the Fed, inflation was running a little bit below target. The tariffs that were put in place made the headlines, but they didn't really push.
All right, good people, you saw that 25 basis points. Thought I was early, but I wasn't early, okay? I wasn't early. So it's better to be early than late. I got something I want you guys to hear later. Let's see. Is it pulled up? Yes. I want you guys to hear. So I wasn't early. For those of you that are just joining, my name is Stock Up with Larry Jones. Today we have the FOMC meeting. If you're new, make sure you hit that like, subscribe, and notification bell. We are going to air the FOMC meeting live here. And the decision is here. Another 25 basis rate cut. And the market expected it. There was no surprises. The indices are all doing about the same, pretty much unchanged on the Fed's decision, which we expected. It was here before, it was here after. There was virtually no movement in the Dow, the S&P. You see here, the NASDAQ is still up. The S&P is about where it was, and the Dow is about where it was. Okay, as we can see, the NASDAQ is up more, of course, because what? Tech is running up. The Russell has cooled off, right? And so this is what we was expected. It was baked in. $1 Million Cup of Coffee is great. All right. Hey, thank you for sharing that. Thank you. The 12-ounce bags will be available before Thanksgiving. Okay. All right. We'll talk about that a little later. Let me cue this up. We got a lot to talk about. We got a lot of time to burn, good people. And so we're going to take this time and talk about some things. We can even talk about a little crypto. I want this to be educational so we could see where is the money. Every time I come on, I want you guys to learn and earn something. OK, but we're going to talk about stocks first. So let's just keep it right there. Let me just pull this up and go right to it. Boom, 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 boom. So this is what he was talking about, the $1 Million Cup of Coffee. You get 6 bags right now. We'll talk about that a little later. All right. I'm glad you enjoyed the coffee. Hey, Charles, how are you, man? Yeah, we haven't heard from you since the hurricane. ETH, I will tell you, ETH is moving good, but it's an underperformer. Bitcoin, I would have more money in Bitcoin right now. Bitcoin is going to still move up as long as it's Bitcoin dominance. I would be more in Solana and Sui right now than ETH. That's just me. Hey, Alabama is in the house. All right. How's everyone doing? Happy Friday Eve. I was like, is it Friday? Man, I was early and a day late. A day early and a day late. All right. So what are we going to talk about? Listen, there's something I want you guys to hear. Okay. Small caps. What small cap stocks do you like now? I talked about them on yesterday. I like the Affirms and the PayPal. I like the SoFi. I like the Palantirs. Those are all in my portfolio. They are on fire. Of course, those are pay as you go. And there's a lot of small caps like anything with steel. Cleveland Cliffs is a good one. You guys saw me do an option play on that one. Anything with steel and concrete, because President-elect Trump got elected. Those are doing well, good people, and I expect them to continue to do well. Hey, Charles, you good, man? That's what man, I love the way y'all came together for Charles, man. That choked the brother up, man. Choked the brother up. I was like this, y'all. Man. So, all right. Do you ship to Canada? Not yet, man. I'm sorry. We don't. It's not me. It's the processing. Okay, Larry, what are your thoughts on XRP? Listen, if you're here for stocks, we're gonna talk about stocks when the FOMC meeting comes on in about 25 minutes or so, 22 minutes or so. Okay, but right now we're gonna talk about crypto because we got time, right? So we're gonna get the crypto in now. Crypto talk now, and then stocks later. And if you're just joining, I'm going to try to timestamp this, okay? So he's asking, what do I think about XRP? go out for the year, you will see what I think about XRP. It's dead money. It's a stable coin. I'm sorry. Get your feelings out of the way. If you look at any other coin, it has outperformed XRP, any other coin. And so when I went live the other night, I sold all of my XRP. I converted all of it out. Yes, I talked about the news. Yes, I talked about it being potentially coming in an ETF. And I believe that's going to come. But I also believe that I have so much time. XRP has been sitting so long and it's going to continue to underperform. So I took that money and I rolled it into Doge, SHIB, and Bunk, to be honest with you. That's what I did. That's what I told the people. And it worked for me before, and it has already worked for me, especially when I rolled it over into the one that I rolled over into Doge. Okay. All right. Let's go. I'm talking to y'all right now. Larry, have you heard of Turbo Token? Yep, I heard about it. It's not my bag. All right. How is Larry's Discord? I tried a few people, but chat. I don't have a Discord. I don't have a Discord. The guys and myself, all of us have one together. Make sure you have the make sure you go into the right tab for hot plays, because I constantly post hot plays and hot plays. Larry will be doing his own next year. All right. And I'm going to call it a stock club. It's going to be a little different. Okay. What's up from Mississippi? M-I, crooked letter, I, crooked letter, I, honoring. Right. All right. What do you think about, I'm not in it. I'm not in it. There's nothing wrong with it. Hey, all the love from Atlanta, from the ATL. Donna. Hey, how you doing? Yep. Colorado in the house. All right. Hey, what's up, good people? I love you guys. Let's talk about some things. Larry, what do you think about Supermicro? Supermicro, I'm just telling you guys that at first I thought, this company is not going anywhere and it still could be saved, but I'm not in it. I shorted it, but I'm not in it. And I would not be doing any call options on Super SMCI. I would not. Because you're just going to get caught. I did that. I did that with the regional bank and lost a bag. Okay. So when it's that choppy, why? When you can easily roll your money into crypto or anything else, you can roll your money into Tesla. You can roll your money in the Cleveland Cliffs. You can roll your money in the Palantir and make money. So why put your money at risk? Right? Maxwell, hey, what's going on, good people? Yeah, we answered that. We answered that. Hey, what's up, good people? Is ETH? We'll hold. I mean, I got a little ETH. I got ETH, but I have more Solana than I have ETH, and now I have more SUI than I have Solana. So I am SUI. So I'm Bitcoin, SUI, Solana, then ETH. Okay, that's where I am, and I actually traded a little of my ETH and went over to SUI. Okay. This was about a month ago, and it's been a great move for me. All right. Hey, Charles, he loves you guys, man. You guys, he was in the hurricane delivering gas to the gas stations while the hurricane was going on. You guys showed up. He posted his Cash App. You know, we all sent him some love. I sent him some love. I hope you got it, man. I know you got it. So, and we just wanted to make sure you was okay. It's cool when the community comes together like that, man. Why everybody else was fighting. All right. What's your stop order on Doge? I'm not going to answer that because everyone else is different. I don't have to. I'm up so much. I can afford to take profit. And sometimes with stocks and crypto, I force a stop. And so what I mean by this is, like, in the mornings when I trade the Qs. So let's say I'm trading the SPY or QQQ, and it's running up and it comes back down and it's running up and it starts to hit resistance. Let's say in the 15, right? And you're in the first half hour. Everybody trades different. What I'll do is when it gets near the top of that range, I'll just squeeze my stop loss and make it trigger. I'll go from, 10% down to 5%, and I'll just squeeze it and make sure that I lock in profits to protect my money from me. being greedy. All right, Chris Reed, that's right. Coffee, I appreciate you. I appreciate you. Yes, sir. Hey, Texas forever. All right. There we go. All right, so what time we got? 1:14. We got 15 minutes, good people, 15 minutes. Then we're going back to this. We are going to go back. We're going to go back and see what's going on. You see the yields. Look at that. All right, so lift, yeah, lift moon, lifted. Yeah, lift did just that. It got a lift. Yup. Crypto on fire, baby Bubba. Yeah, you old school. You know about that, baby Bubba. I love it. I love it. You made money. That's cool. Play Uncle Larry. I had a limit. Place my trailing stop. I'm not in this one, but I check it out. QUBT. Yep. What do you think about crypto miners, Myra Riot? You know, I'll be honest with you. I literally killed it with crypto miners. I was the one that brought these miners to the company, to the family. And you guys know these crypto miners, I've had all of the CEOs on this show. Right now, for these crypto miners, they don't make the money the way they used to. So whatever the highs used to be, the new highs, you need to be looking at a much lower high as it pertains to these crypto companies, because if they haven't shifted their business models, since the halving, it's difficult. They make their money a different way. So it's not the same thing. That's why I haven't been in it, right? At some point, it was better to be in the miners for me. And at some point, it was better for me to take all of my crypto miner money or my Bitcoin miners money and just put it into Bitcoin. And it's just been working for me, okay? Without those really big, huge fall offs, okay? PEPE is available on Webull and Crow. Is it? PEPE is available on Webull? I got to check that out. Oh, it's now available on Webull. Wow, I got to check that out, bro. Thank you. I'm saying, bro, good vibes only. I don't know if you a bro or a sis. All right, family. Hey, well, you know. Oh, this whole thing, this whole thing's top. This is what I cut the grass in. Stop it. MicroStrategy, ripping. I know it's got to be ripping, man. I have some MicroStrategy in, we don't need to open up another window. Let's look at MicroStrategy. MSTR. Yeah, MicroStrategy's ripping, good people. Look at that. Look at that. Of course, we expected it. We expected MicroStrategy to rip. Yep, look at that. Nice, nice. Yeah, who's in an option play on MicroStrategy? Congratulations. That's all I got to say. What do you think about ARM? What do you ARM? What do you ARM? What do I ARM? Or what do I think about ARM? I got a little ARM. I'm heavier in other chips. I think that's what you're talking about. Crypto bull run is just starting. XRP is just stable. Yeah, it is. It is. I'm not against it. I'm just saying don't have all your money in something that's not moving. Look at Bitcoin. Just go to all the other coins, and I know it's not a meme coin, right? But it's traded like one, okay? And it's just one of those things that's not moving. So why would you be in a car on the expressway, everybody's doing 75 and you doing 5? Just think about that. Yeah, I'm sorry. So it is what it is. What do I think about Crow? I think that those are they've been sleepers. They're just starting to move. And I'm just going to say something. If you only have coins from last year and like ADA, they're just, if you look at the year, they're hugely underperforming. Hugely. I don't have any ADA this time around. I don't have any ADA. I don't have any Crow. I don't have any Mana. I don't have any of the ones from last cycles like that, as many. Okay, I have a few. And last year, Solana was my big dog, and then the year before, the cycle before that, it was Ethereum. So now it's shifted. SUI, if you look for the year, the month, the year, the 3 month, you'll see that SUI's been outperforming. So I swing. I get in the vehicle that's running faster. Okay. Why SHIB not blowing up? Okay, let me tell you guys about SHIB. Okay, Doge is moving because Elon, right? Elon is with who? Our president-elect Trump, right? Elon is with president-elect Trump. That's why Doge is moving. That's why Tesla is moving. That's why, okay? But here's what's gonna happen with SHIB, and I'm holding my SHIB, though I traded my XRP, right? This is only what Larry thinks. When, and they're coming, when Bitcoin really starts to run and it starts to really go up, hyper, above 80, and it's on the local news, they're talking about Bitcoin more than they are right now. And then all of these, the greatest generation in the world who has all of the money, wealth still, that's passing it down. What happened? You remember last cycle, your mama and them wanted some of that Dogecoin at the top. And that's what's going to happen. They're going to want some of that SHIB. They know about Doji. Give me some of that Doji coin. And they know about SHIB, Shiba Inu. They know about these coins. So what are they going to do? They're going to come late, Johnny come lately. And then those will perform. So I just dollar cost average at low. I'm green on it. And I'm just going to hold it. So, and I'm not telling you what to do. Remember, anything that I suggest or talk about is not a suggestion for you to buy, hold, or sell. It's just what Larry is doing. Larry comes on this show and talk about what Larry is doing. Got it? All right. So, hey, I covered ETH. Already. Yep. Josh says SHIB is done. I disagree with him. I saw that yesterday. I disagree with Josh. SHIB will resurrect from the dead. When it starts to move, it's going to move. Now, don't hold your SHIB just because Larry is holding his. But you can put up XRP and SHIB for the month, 3 months, and a year. You can clearly see that SHIB is not dead yet. Okay? So I disagree with Josh. All right? I made a comment on his video. It's like, really? All right. Conclude done. No love. All right. Yep. I'm done with it. Y'all quit asking. I don't need to talk about it. Any stop on yep. That's just me. Yep. Josh said SHIB is done. I know I disagree with him. Is Ando back? Okay. I tell you guys, I rolled my Ando just like I said I would. I rolled my Ando. What was that? A couple of days ago. I rolled my Ando into Sui. I just wanted a bigger position in Sui. As a matter of fact, I rolled my Ando. I took half of it, put it in Sui, and put the other half in Solana. And it was a good move. Yep. Hey, Larry, thoughts on grass? I don't smoke any. All right, next. I'm just joking. I don't know, man. I don't even know. I would have to even follow grass. I mean, I don't even cut my grass. So, hey, what's up, good people? Popcat is performing, okay? Popcat is performing. I think Pop is going to pop again. And, if they come out with a new coin that's on a good network, like Solana or something, and it's a cat or a dog, you guys know how this is. It's a popularity contest. How about Solana? Yeah, Solana Inc. Solana? If you're talking about Solana, it's doing good. Any predictions on Solana? Solana's doing good. I'm not selling my Solana right now. AMC, never leaving. Okay. All right, bro. All right. Crypto miners, we already talked about that. Sound to the moon. Holding my sound. I got mine's really low. Sound. Yep. Sound hound. All right. Have 2x leverage stock on ETH and Bitcoin. You got, okay. I'm happy for you now, but I'm just telling you, man, most people that's doing, 90% of the people that's doing leverage on crypto should not. Gonna lose money. I'm just telling you guys. Spider 6, yes, I think so. Shit. Oh, crypto good. Hey, Larry. For me, get out of debt completely. Current crypto bag. My man, I love this. Y'all see this? Larry, thank you for putting me in a position I can get out of debt completely with my current crypto bags if I sell it all at this point. So let me ask you this. Let me pin this one to the top. Okay, let me pin this one. What's your exit plan? What's your exit plan? All right. I'm going to ask you that. What is your exit plan? You have to have an exit plan. The biggest mistake I made in crypto last cycle, and probably 80% of people, is at the beginning, we tapped out, sold too early. And at the end, we didn't believe that we were in the markdown. So we didn't receive that. Okay. And so you have to have an exit plan. And if your exit plan is trying to guess the top, you're going to lose. So at what point are you going to start? So you're already, because I want you to be, here's what I would suggest. Once Bitcoin hits 80, I want you to think about taking some profit. And you don't have to take out all your profit. You could take out enough profit to pay half of your debt off, right? And with zero risk once Bitcoin hits 80. And then you can just leave the other half in. Don't listen to anybody that's telling you just hold, never sell, never sell. All of that foolishness. You're going to ride it up like my good friend, the Dogecoin millionaire, and you're going to ride it all the way back down. He went from like 30K or 30K he invested to 3 million all the way back down because people was like to the moon. Okay. Thoughts on bunk, man. I'm bunk daddy, man. Who's your daddy? Bunk daddy. I got a big bag of bunk. I'm doing well on it. So I'm holding it. Hey, DCAing in the SUI is good strategy for the rest of 2024. I'm still, when SUI, I have some buy orders, a few buy orders on SUI, and I still, they may trigger, right? And if they don't come back down, you can go with Coinbase. You can set it like 1% from where it is. I believe you can set it down to 5% from where it is. And then just chill. Don't even buy it right now. Just set it. So if it drops by 1% or if it drops by 5%, using the tools that you have in these apps will make you a lot of money. Yep, to the moon. Yep. Do you think crypto will pump once the Fed speaks? Nah. I don't think it's going to like pump. I don't think it's going to be a big pump up. If I'm proven wrong, let me tell you, that would be welcome news because the Fed already did 25 basis points, right? The Fed is doing what was already priced in by like 92%. So this is no news. I don't think the crypto is going to spike up. This is not the same Fed meeting that we was having before. Okay. All right, so what else we got? Muck Love. He said, Muck Love from UK. Much love, I know, man. I appreciate you. I'm laughing because I make that mistake many times. All right. Hello from Indiana. All right. Is Sheeb done? No, Sheeb is not done. Josh is wrong. Sheeb is not done. I roll with myself. Come on, Josh. All right. When I grew up, I wanted to be like Uncle. Oh, when I grew up. Oh, that's cool, man. Indiana in the house. Well, there we go. Nantucket. For your old schoolers, don't sing that song. Love the page, Larry. Have been sub for years. Any stock plays today? Not really, because they already gave the Fed decision, and if the Fed says something that causes the market to start falling, you guys know how we make money. We can jump into the SPY or we can jump into the Qs and we can do some puts. So you got to listen. But then what always happens? It always bottoms out, turns around, and go right back up. But this is going to be different because everything was priced in. We had so much good news. I don't expect much movement at all. So we shall see. It's not like the other ones. All right. Riot and Mara. I talked about those earlier. Just rewind. I just talked about why I just haven't gotten back into them. There's more money to be made in other plays in crypto themselves. So in 2020, the way I made 2020 into 2021, the way I made money with crypto was I didn't start in crypto. I actually started out buying the miners. It was Mara and Riot. And then I called Josh. I was like, check these out. and he was checking them out, and I was like, this is what they do. He didn't even know what, most people didn't know what they were in 2020. And I got them when they were $2, right? I bought my first Mara share at $3.50, and it went down, and I think it went all the way back up. Then I doubled down at $1.50, and then I sold it at like $48. But at some point, it was best for me to be, you know, in what they mine, which was Bitcoin. So, yes, I got Link too. Link is in there. France in the house. Man, I want to come to France, man. Who do you know? Y'all set something up over there, man. I got a beret that I want to wear, you know? I want to talk, you know, I want to get on my wife's nerves with an accent like I did when we travel, when we go to other countries. Whatever country I'm in, I'm using that accent. And she's like, oh, no. All right. Saudi Arabia, energy stock, energy banking is doing good. I don't know necessarily on what type of energy. I know the Saudis are big on energy. And I really got to look into energy. So before I answer that, I need to really look into energy based on the policies. OK. All right. So let's go right to it, good people. Let's see what they're talking about over here. And I'll be back.
Absolutely not. Tension's going to be pretty wild.
I think it's going to be one of those news conferences, and Mr. Clarendon knows this well, where you have a sheet of paper in front of you, you've got your notes written down, and every time you get that question, 20 different versions of it, that sheet of paper comes up and you read it.
You know, they're going to keep talking about Trump, and he doesn't have any answers. Watch these idiot. I'm sorry. I shouldn't be calling these people idiots, but these reporters. Here we go.
Sheets for the chairman?
I participated in discussions of press conference briefings, yes.
25 basis point reduction over at the Federal Reserve. Here's the chairman, Jay Powell.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by 0.25 percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So let me say that in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Nick.
Chair Powell, Nick Timrose from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Can Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long bond rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent and if they're material. Then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now? You get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. Let's talk about the data we've gotten since the last meeting. So, in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly, the September employment report was stronger. The October report not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular, and so overall feeling good about economic activity. So I think we would factor that in. At the same time, we got one inflation report which wasn't terrible, but it was a little higher than expected. So I think really the question is December, and by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and we'll make a decision as we get to December.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
I can't. We don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I will just say for December, we're going to be, again, at every meeting, we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points. And we're asking ourselves, is that where we need to be? That we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be asking in September and in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting.
Yeah, totally appreciate that. I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, we're going to wait and see how things come in December. I mean, it's just. I would put it this way: we're on a path to a more neutral stance, and that's very much what we're on. That has not changed at all since September, we're just going to have to see where the data lead us. We have a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but I would say, I would say that
Again, we didn't update the SEP, so I'm not going to characterize, where the committee would be.
This is just a test. I'm testing these two out while he speaks.
Elaborate, explain a little bit the two changes in the language of the statement here. In the first paragraph, when you say inflation has made progress, dropping the word further progress, and in the second paragraph, dropping this
win or lose
confidence that inflation was progressing towards its 2% goal. Is there any policy substance behind either of those changes in language? Is it meant to open the door to a December pause? Is it meant to communicate anything about the stickiness of core inflation the last 3 months?
Not really, no. So let me tell you what we were thinking. So the test of gaining further confidence was our test for the first rate cut, right? And so we met that test in September, and therefore we take that test out. If you leave it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is what that's really all about. It's not meant to send a signal. Neither of those is meant to send a further signal. And saying further progress, it becomes a test. We don't want to be. We don't think it's a good time to be doing a lot of forward guidance. There's a fair amount of uncertainty in what I've said. The path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the point is to find the right pace and the right destination as we go. And I think there's a fair amount of uncertainty about that. And you don't want to tie yourself up with guidance. You want to be able to make sensible decisions as you go.
Steve Leisman, CNBC. Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind the recent rise in interest rates, and are rising deficits a concern to you?
So we don't comment on fiscal policy, and again, I don't have a lot more to say on what's driving bond yields. In terms of policy changes, though, let me give you a sense of how this works in the ordinary case. Let's say Congress is considering a rewrite of the tax laws. Doesn't matter what's in the content. So we would follow that. At a certain point, we'd think we see the outlines, so we'd start to model it. And then we'd wait, and at a certain point, the staff would brief the FOMC and say, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we'd try to get smart on that, and then the law actually passes. And you'd start to put it. You'd probably run an alternative simulation before that happens, just to keep people trying to understand it. Then when it actually passes, it goes into the model, along with a million other things. So, we have a very large economy. Many things are affecting it at any given time. And a law change of some kind would go in there, but it would go in. But it would, it's a process that takes some time. Clearly, the legislative process takes a lot of time. And of course, the real question is not the effect of that law. It's all of the policy changes that are happening. What's the net effect, and the overall effect on the economy at any given time? So I think that's a process that takes a lot of time, and that we go through all the time with every administration. Constantly, and this will be no different. But right now there's nothing to model right now. It's such an early stage. We don't know what the policies are, and once we know what they are, we won't have a sense of when they'll be implemented or all those sorts of things. So I think I would just say we're not doing that now, and all that will take time, and it will be very much regular order when we do that.
If I could just follow up on Nick's question. Are the current rates something you feel like you need to lean against, in that they go against the direction of policy by adding restriction to the economy, or do you just take them as a given and perhaps a signal that you should do less?
I just think the first question is, how long will they be sustained? If you remember the 5% 10-year people were drawing were massively important conclusions, only to find, 3 weeks later the 10-year was 50 basis points lower. So, it's material changes in financial conditions that last, that are persistent, that really matter. And we don't know that about these. What we've seen so far, we're watching it, we're reading, we're doing the decompositions and reading others, but right now it's not a major factor in how we're thinking about things.
Chris.
Thank you, Chris Rugaber at Associated Press. You mentioned the positive economic data that we've seen since the September meeting, including the revisions to things like savings, higher GDP growth. We saw a stock market jump yesterday. That's renewed some of the questions about why do many cuts at all in this with this backdrop.
So you're right. As I mentioned, and as you mentioned, the latest economic data have been strong, and that's, of course, a great thing and highly welcome. But, of course, our mandate is maximum employment and price stability, and we think that even with today's cut, policy is still restrictive. We understand it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at our goal variables, the labor market has cooled. A modest rate, and we don't need further cooling, we don't think, to achieve our inflation mandate. So that's the labor market. Inflation has moved down a great deal from its highs of 2 years ago, and we judged, as I mentioned, that it's on a sustainable path back to 2%. So the job's not done on inflation. But if you look at those two things, we judged in September that it was appropriate to begin to recalibrate our policy stance to reflect this progress, and today's decision is really another step in that process. Overall, as I mentioned, we believe that with an appropriate recalibration of our policy stance, we can maintain strength in the labor market even as our policy stance enables further progress toward our inflation goal.
Great. And just to follow up, what might cause you to pause rate cuts in December? What kind of economic data would lead you to that path? Thank you.
So we haven't, made any decision like that at all. But we're in the process, as I mentioned, of moving policy down, our stance down over time to more neutral level. And as a general matter, as we move ahead, we are prepared to adjust our assessments of the appropriate pace and destination as the outlook evolves. So, for example, if we were to see the labor market deteriorating, we'd be prepared to move.
If you guys didn't hear me, for those of you that's in that play, move your stop losses up.
Possibly neutral or close to neutral, it may turn out to be appropriate to slow the pace at which we're dialing back restriction. Again, haven't made any decisions about that, but that's certainly a possibility. If you can think of it as similar to what we do with asset purchase, with asset runoff, with QT. So we reach a point where we slow the pace, much like an airplane reaching the airport slows down, and so we're thinking about it that way. But it's something that we're just beginning to think about.
Edward.
Thanks, Chair Powell. So with the noise in the jobs reports that we've seen, and you look at the Fed's favorite inflation, PCE inflation, overall it's 2.1%, very close to the Fed's target, but core inflation is 2.7%, and it's been that way since July. So why doesn't this data give fuel to a rate pause for this meeting?
Well, so I think if you look at the 3 and 6 month, you're quoting the 12-month. So yes, we look at all of them, right? But if you look at 3 and 6 month core PCE, you'll see they're around 2.3%. So we look at all of them, and we also look at 12 as well. But what it's telling us is that we really have made significant progress, and we expect there to be bumps. For example, the last 3 months of last year, the core PCE readings were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward the end of the year. On the other hand, the January reading certainly looks like an example of residual seasonality, so that we saw last year. So when that falls out of the 12-month calculation in February, we should see a thing down. So it'll literally be a bump up and then down. We understand that. Overall, you see the progress on inflation, and you also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the non-housing services and goods, which together make up 80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be in the early 2000s for a period of 5, 6, 7 years. So they're back to that level. What's not is housing services. So let's talk about housing services. Housing services is higher. What's going on there is, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market leases are, market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's one thing. The other thing is, I'd say look at the labor market, not a source of inflationary pressures. Where's it coming from? It's not a very tight economy. What is the story about inflation? You see that catch-up inflation also in insurance and several other areas. So you're seeing, we're not declaring victory, obviously, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path over the next couple of years and settling around 2%. That story is intact, and it won't be one or two really good data months or bad data months aren't going to really change the pattern at this point now that we're this far into the process.
So you're quickly trying to get to that neutral rate that you see, or do you foresee that you have some time to get there?
Nothing in the economic data suggests that the committee has any need to be in a hurry to get there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully, but we do see maintaining strength there. And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's not meant to have a specific meaning, other than to the extent the economy remains strong, we have the ability to take advantage of that as we try to navigate that middle path between the two risks.
Craig.
Hi, Chair Powell. Craig Torres from Bloomberg. 2 questions today. Did you learn anything about what Americans think about the economy from the election results? First question. Second question. I want to talk about some labor market indicators, and I do so with great respect for your attentiveness to the maximum employment side of the mandate, Chair Powell. So or higher for 6 months. One of the broadest measures of unemployment is up about 0.5 point from a year ago. Compensation gains are sliding back. The quits rate, a signal of labor market dynamism, has been heading down to that bad neighborhood of the 20 teens. So you have put a marker at Jackson Hole saying any further cooling is unwelcome. It is cooling generally a little bit further. So at what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So on your first question, I'm not going to talk about anything that relates directly or indirectly to the election. On the second one, this is the great question, and it's the one we think about all the time. So I'll just say a couple things. There's nothing really surprising here. What we know is that the unemployment rate is low. We also know that it's moved up significantly from a year or so ago. So we've seen a big change upward in unemployment. Sometimes that has meant bad things. So far, it doesn't appear to be. It appears that I wouldn't say that the labor market has fully stabilized, because I do think it's continuing to very gradually cool. But it seems to be in a good place, and our policy, of course, is designed to keep it in that good place, to maintain the strength in the labor market while also enabling further progress on inflation. You mentioned a bunch of indicators, and you're right. The openings to unemployment rate is back to a normal level. I would characterize it more broadly as normalizing. You mentioned wages. Wages are still running just a bit above where they would need to be consistent with 2% inflation, unless productivity is going to remain at this high level. If we see productivity, more sustainably at these high levels, then that would sustain higher wage gains. So I would say, in fact, you can say it the other way, that wage increases are now consistent with 2% inflation, given current productivity readings. But of course, the lore on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the longer-term trend. That has always been the case for 50 years. But it may be that we're now 5 years. If you look at the NIPA revisions that came out a month ago, we're 5 years into a nice set of productivity readings, which are sustained and very healthy. But overall, it's a good labor market. We could talk about 20 different data series. We'll be looking at all of them, of course. We don't want the labor market to soften much from here. We don't think we need that to happen to get inflation back to 2%.
Victoria.
Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not?
No.
Mike?
Michael McKee from Bloomberg Radio and Television. You talk a lot about what the data are telling you and how you are dependent on the data, but in terms of forward-looking assessments of the economy, what are you hearing from CEOs or other officials around the country? What did you hear today from the regional bank presidents about what companies and consumers think about where the economy is going from here rather than looking backwards? And does that match up with what your forecasts have been and what you think the appropriate policy path should be?
So it's hard to characterize a really interesting set of discussions we had, and of course you'll see them in the minutes in 3 weeks. But I would say this: I think the comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now. Pretty constructive, feeling that the labor market is back to normal, to the point where it's no longer that much a discussion topic in their worlds, whereas 2 years ago it was all they were talking about. So they feel like the labor market's in balance. People feel good about where the economy is. Demand is obviously pretty strong. And you're seeing 2.8% growth in the third quarter estimated. Maybe the year's 2.5%. This is a strong economy. It's actually remarkable how well the U.S. economy has been performing with strong growth, a strong labor market, inflation coming down. We're really performing better than any of our global peers, and I think that is reflected in what you hear from. What I hear people hear from CEOs. I don't get to talk to a lot of CEOs in my job, but I hear what others summarize from those. And of course, I hear the Reserve Bank presidents do a lot of that. And it's pretty constructive overall. Now, that's not to say there are areas of caution and things like that, but ultimately, overall, pretty positive.
Well, to follow up the areas of caution, if there were black clouds on the horizon that you identified as something you're watching, what would they be?
I think it's things like clearly geopolitical risks around the world are elevated, and just as clearly
I'm selling right here. Do what you want to do.
That can change through the price of oil or otherwise, but people talk about those as something that's on the horizon all the time. But ultimately, if you look at the U.S. economy, its performance has been very good, and that's what we hear from business people, and expectation that will continue. If anything, people feel next year, I've heard this from several people, that next year could even be stronger than this year.
Andrew.
Hi, it's Andrew Ackerman with the Washington Post. I just wanted to follow up on the discussion earlier on fiscal policy. Your predecessors, Greenspan and Volcker, spoke up loudly when they thought large budget deficits endangered economic or financial stability. Will you do that too? And right now we're in a period of full employment. We have large budget deficits and debt at historic highs that are rising. Is that something you'd speak out against?
So, I have said many times, no more, no less than what the predecessors you mentioned have said. And what that is that the U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable. And we see that in, you've got a very large deficit you're at full employment, and that's expected to continue. So it's important that we, that to be dealt with. It is ultimately a threat to the economy. Now, I can say that. I don't have oversight. We don't have oversight over fiscal policy. I've said it on many occasions, just said it again.
Okay, thank you. I guess the other question is, to follow up on Victoria's question, do you believe the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
Courtney. Courtney Brown from Axios. In response to Howard's question, you said it wasn't an ideal time to give forward guidance because of the economic uncertainties. Can you lay out what some of those uncertainties are and whether or not it includes some of the proposals that the president-elect has put out on the campaign trail? Tariffs, for instance?
No, I was not referring to the new administration's policies at all, nor will I today. So what I'm just saying is, as we look ahead, we know, and I mentioned this in my statement, that the risks are two-sided. I guess I should start by saying that we think that the economy and we think our policy are both in a very good place, And but as you look forward, you say, what are the risks? And one risk is that we would move too quickly and find ourselves having moved too quickly, and inflation comes back, and we lost our chance to get inflation back to 2%. So we have to avoid that risk, and to avoid that risk, that means you want to move carefully. The other risk is that we move too slowly, and that we allow the labor market to weaken too much and do unnecessary damage to the labor market and to people's working lives. That says don't get behind the curve. So these two things are the two risks that we have to manage, and so we're in the middle there. We try to be in the middle and deal with manage both of those. Again, the idea is to support the strength we have in the labor market and in the economy, but also with somewhat less restrictive but still restrictive policy, enable further progress toward our 2% inflation goal. This is a thing where we're meeting by meeting. We're going to be making our assessment of what the right path is. It's not as important. The precise timing of these things is not as important as the overall arc of them. And the arc of them is to move from where we are now to a sense of a more neutral policy. We don't know exactly where that is. We only know it by its works. We're pretty sure it's below where we are now. But as we move further, there will be more uncertainty about where that is, and we're going to move carefully as this goes on, so that we can increase the chances that we will get it right.
Simon.
Thank you, Chair Powell. Simon Erminovich with The Economist. I know you don't want to share your decomposition of bond yields, but if you look at the break-evens, it is clear that longer-term inflation expectations do seem to have risen, up at about 2.5%, for example, on the 5-year. That's up half a point from when you cut in September. Do you have any concern at all that longer-term inflation expectations are de-anchoring, or put another way, are anchoring at a slightly higher level? Thanks.
So we would be concerned if we thought we saw longer-term inflation expectations anchoring at a higher level. That's not what we're seeing. We're still seeing, between surveys and market readings, broadly consistent with. I looked at the 5-year earlier today, and it's probably moved, but it's kind of right where it's been, and also it's pretty close to consistent with 2% PCE inflation. So that's been a traditional one that we look at a lot. But overall, expectations seem to be, and really have throughout this, in a place that's consistent with 2% inflation. But you're right to say we watch that very carefully, and we will not allow inflation expectations to drift upward. But that's really why we reacted so sharply back in 2022 was to avoid that.
Kelly.
Hi, Chair Powell. Kelly O'Grady, CBS News. We just talked about what you've heard from business leaders on the economy, but many average Americans are still not feeling the strength of the economy in their wallets. So what's your message to them on when they might expect relief?
So you're right that we say the economy is performing well, and it is, but we also know that people are still feeling the effects of high prices, for example. And the world went through a global inflation shock, and inflation went up everywhere, and it stays with you because the price level doesn't come back down. So what that takes is it takes some years of real wage gains for people to feel better. And that's what we're trying to create, and I think we're well on the road to creating that. Inflation has come way down. The economy is still strong here. Wages are moving up, but at a sustainable level. So it's just I think what needs to happen is happening, and for the most part has happened. But it'll be some time before people regain their confidence and feel that. And we don't tell people how to feel about the economy. We completely respect what they're feeling. Those feelings are true. They're accurate. We don't question them. We respect them.
And just a quick follow-up, President-elect Trump has been critical of your performance. Any concern about his influence on the Fed's independence?
I'm not going to get into any of the political things here today, but thank you.
Nancy. Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. What is your plan if we start to see stagflation?
Well, so that's the whole plan is not to have stagflation, so we don't have to deal with it. So that is actually our plan. It's of course a very difficult thing because anything you do with interest rates will hurt one side or the other, either the inflation mandate or the employment mandate. I would just say that we've been able to see inflation come down a whole lot, much closer to our goal, without the kind of sharp increase in unemployment that has often accompanied programs of disinflation. So, knock on wood, we've gotten this far without seeing a real weakening in the labor market, and we believe we can complete the inflation task while also keeping the labor market strong, and that, of course, is exactly what we're trying to do.
Can you rule out an interest rate hike next year?
No, I wouldn't rule anything out or in that far away, but that's certainly not our plan. I mean, our baseline expectation is that we'll continue to move gradually down towards neutral, that the economy will continue to grow at a healthy clip, and that the labor market will remain strong. If you look at our that will not change from the September SEP. That is our baseline forecast, and short of some exogenous event, that will continue to be our forecast for the foreseeable future. So, but ultimately, we're not in a world where we can afford to rule things out a full year in advance. There's just too much uncertainty in what we do.
Let's go to Jean for the last question.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to go back to a comment that you had made about Americans being quite unhappy about the cumulative price level rises over the past few years, even though now inflation is back on a path to 2%. Would it be appropriate for the Fed to undershoot for a while on its inflation goal under the average inflation targeting regime so people have a chance to catch up?
No, that's not the way our framework works. We're aiming for inflation at 2%. We did not think it would be appropriate to deliberately undershoot. And part of the problem there is that low inflation can be a problem too, in a way. But that's not part of our framework, and it's not something we're going to be looking at in our framework review. Thank you very much.
An absolutely fascinating news conference with Chairman Powell. Where do we start? Where do we end? A 25 basis point reduction for the Federal Reserve.
There you have it, good people. There was a lot. Yeah, they messy. They real messy. They already knew he wasn't going to answer any Trump questions. They knew that. And you heard what he said. If he asks you to step down, would you? No. And I was just like, it was a dumb question. Some of you guys may think it was a smart question. It was a dumb question because they knew he wasn't going to answer that question. It was a dumb question, right? Some of these reporters get on my last nerves, and I don't even know how many nerves I got. But all I know was whatever the last one is, they get on that nerve, all right? So let's go over a few things. Oh, by the way, before you guys tap out, listen, man, I'm trying to show y'all something, and these spammers are coming in. So, guys, did you see the play that I did while we were on, right? Someone said Larry paid for his dinner. I did. But I want to show you guys a couple of things. Don't sign off, all right? I want to show you guys a couple of things that I just found out, actually, thanks to you guys. Now, someone said PEPE coin was available on, okay, stop. Webull Pay. Everybody's trying to, all right, let me just do this. Let me cut this on airplane mode, right? All right. Everybody and their mama want to text me when I'm trying to talk to y'all. All right, here we go. Sorry about that, good people. I want to show you guys this before you go. And you guys saw me make money. It doesn't happen like this all the way. All of the time. So if you notice, it was just a scalp. Just a little bit, not a lot, because I didn't know which way it was going to go. And also, hey Larry, after the FOMC meeting, do you do a TA on Tesla and Mike? No, we got a lot to cover. All right, yeah, hit that like button, good people, because every single time I go live, I give you guys stuff to make money with. But I'm going to hit some key points, okay, good people? And hit that like button. So listen, I did go to Webull Pay, right? And what did I do? I purchased PEPE coin on Webull Pay, right? For those of you that don't know. All right, now let's get to some stock. We can get back to that in a minute. So you guys saw me do this. I bought the SPY and I bought QQQ right while we were going live, right? And then boom, it went up. And then boom, it went up. And then boom, it went up. So yeah, so you see like $170 that I made while the Fed was speaking. Now, I'm going to say this because this is more important than just talking about one or two stocks. I will tell you my win rate of trading while the Fed is speaking is like 90%. It's like insane. And so here's a lesson for some of you guys. If you do a certain trade and you have a bigger win rate, especially for those that's doing options, then there are people that just do that. Like I could just do the 10 or so Fed meetings, right? And only trade those with more money in, and I will outperform most traders. And so that's what I wanted. That's the lesson for me and for you guys. You don't have to hit a home run, every day. Okay. So I just wanted to show you guys that. All right. So, and I'll get back to you guys. All right. He said the labor market was solid. All right. The Fed is trying to get to neutral. We know that. He knows it's 2% rate. Right. He said the economy is doing well, but people are still feeling the hurt of this back-breaking inflation. Right. He wouldn't answer any Trump questions. They knew that. The reporters knew that before he walked in. All right. Inflation has come down sharply while keeping the labor market strong. And that's why we haven't entered into a recession. Okay. And then he also said he's not ruling out an interest rate hike next year. See, those are, if you guys know, and I've aired probably 12 of these. If you guys notice that they always try the got you questions that will bring the market down towards the end. Have you guys noticed that? They always save that to the end. It's by design, good people. This is some fraganackle, all right? But we smarter than that, all right? And then somebody asked, was I going public with my coffee, $1 million cup of coffee. No, I'm not going public with that coffee. So far, everybody's been raving. But listen, this is what I want to do. For the when the bags, 12-ounce bags launch, I want to all, not just one day, but for the month of December, I want to take all of the profits, all of it, and we want to find a charity for, and I believe I know what charity. I'll share it with you guys. And we want to give it to the kids, all right? These kids don't have Christmas. So I got to bag it up, maybe start like the end of this month after we launch. And then, matter of fact, when they're available, I'm just going to go from when they're available all the way until Christmas, like before Christmas, where we could give it to, some of these kids, shout out to my man, Keenan Grace, how he did Kids with Cancer. We raised $30,000 kids with cancer. Should I say Keenan led that? Keenan did. I just came and helped. Okay. So that's what we want to do with this coffee. And then I'm going to start doing something like first fruits, like every month, the first of the month, we're just going to give. We're just going to give it. Okay. While we are enjoying coffee. Hey, what's up? What's up, good people? So somebody said Ethereum woke up a bit. Yeah, actually, Ethereum woke up a bit over the last 48 hours. It has. Yeah, that's me. So, Larry, if you had to start all over again on the market, what would you do first? Build your account. What would I do to build my account first? This is a good question for all of you that are new. I would just start right now. I would start with QQQ, and I would make it 80%. I wouldn't try to guess what stock, this stock, that stock. I think AI is going to be huge. There has been billions of dollars put into AI, right? And I think that QQQ is going to outperform. If you notice, I got into a QQQ play. This is what I want to teach you guys, okay? I got into a QQQ play, and it's tech heavy, okay? And so that's what I believe is going to outperform, right? I would have 10% crypto. And that's a whole nother story. 10% crypto, I would say at least 75% I would be into just QQQ. While you're figuring things out, set yourself up really good. And right now, since the election is over and all of that, I want you to put money into your broker, but only deploy half of it and not all at once. Just don't do it. Just dollar cost average, okay? Every time you get paid, that type of deal. Just start. Time in the market will outperform trying to time the market. Okay. Hey, thanks for the super chat from Wendell. Wendell, appreciate it. All right. Tesla to 300? Yes. When? I don't know. Tesla to 300? Absolutely. I'm buying some Tesla today. When I get off of this, I'm buying some more Tesla today. And then my broker automatically buys it on Friday. So yes. And I'm buying some more NVIDIA today. All right. That's you. Hey, I love you too, Wendell. Yeah, what's up, man? Love you too, bro. All right. Angel, yes, please hit the like button. Hey, Larry, it's time to go all in on crypto. No, the time to go all in on crypto was when I was, all of these months when we were going all in. That's the time to go all in when it's low. If there's a pullback, I would go in heavier. We don't go all in at the top. That is, they call us dumb money, and that's why. So no, I don't. You can. Now, it could take off from here. Do I think Bitcoin? I think Bitcoin could hit 80K by the end of this year. I think Bitcoin could hit 100K by next summer. That's what I think. But there's 1,000 things that could happen from now until then. Hey, Larry, no, bro, I'm not a technical analysis. I'm sorry, Kyle. Let me apologize. I needed to read your comment. I'm I'm not a TA guy. I'm really not. I just traded. I just made money with no chart, and I do that every morning with no chart. Now I'm not telling everybody to be like me. You know, while I'm out driving, I got CNBC on in the car, and I just look. I go to my app, right? I'm gonna tell you guys sometimes. I go to my app, right, and I see what's going on. I see which way the market is moving. If I'm out, I was out this morning, I wasn't able to trade. And then I see the market moving and I just make a move. And you know, you got little charts on your mobile app, right? And so that's how I make my move, right? And so just go to your app, look at it, look at the chart. You see it going up, I go with the flow. I'm in short, I get out, I take my scalp, and I do that over and over and over, rinse and repeat. And you make more money that way. All right. Yeah, it's something to look at. That's something to look at. I know Kramer does with his, but I'm going to do that with something else. I'm going to do that with something else. But that's a great, that you're right, Donald. We should have a charitable trust to invest that makes a quarterly donation. Yeah, I'm going to look into that. You're absolutely right. I like that, Donald. How much money did you lose first 1 and 2 years of trading? Options. About 70%. I'm going to tell you why. All right. And I'm not an options genius. I'm going to tell you why I lost this money. Because I didn't understand disciplines. Was I winning? Yes. But the next day when you win after hitting a big option play, so like generally what you guys just saw me make this money, usually I'll go in with 10 contracts, right? And I'm no pro. Usually I'll go in with 10 contracts. So it would have been 10 times this much, right? And especially doing the FOMC meeting, 20 times doing the FOMC meeting. But what I've learned is this. If I win big, and that's not a big win at all, but if I win big, you know, $2,500, $4,700, you know, sometimes one time I hit $4,700 in like 15 minutes, right? And then, you know, I've done $12,000, $14,000 on an option play, right? So you know what happens the next time, right? The next day you think you're a genius. I thought I was a genius. Good people, I thought I was a genius. I thought I had just worked out. I'm brilliant. And gave it all back the next day. So limit your order sizes, right? Use your stop losses. Trust the stop loss when it triggers. And then for me personally, if I have a big win, the next day I don't trade. And then my next trade, by my rule, has to be no more. I have put no more money to risk than a third of what I just won. And since if you do that earlier, you will make more money. And then again, knowing that volatility, the volumes on Monday mornings and Friday mornings, just the things like that, and not trying to be a genius every day. And don't force a trade. Don't come in and say, okay, today I got to make 1,200. The market don't care about how much your rent is. Oh, I just need to cover this bill. Are you on crack? I'm sorry, good people. I'm sorry. I'm talking to y'all like I talk to my friends. So it's just, no, you don't do that. The market doesn't care about your bills. You see what the market is going to yield to you. All right? All right. All right. Josh was on the rocketing. Well, you know, I understood his reasoning, but I just, yep. So true. Yeah, they were just. Mm-hmm. Today, I keep buying SUI, man. SUI is my Solana, right? First there was Bitcoin, and then Ethereum clipped Bitcoin, right? In that season. And then Solana clipped Ethereum. And now SUI is clipping Solana. And so I'm riding heavy with Solana. I'm sorry, SUI, not Solana, SUI. So first it was Bitcoin, then it was Ethereum that was the fastest moving car. So I left Bitcoin, got in Ethereum because it was the fastest moving car. And then Ethereum starts running out of gas, right? Then I abandoned that car like a thief. Like you guys are living in LA. You know how the helicopters chasing and how they go from car to car to car. I want you to think about this. So we getting away. We got a bag of money, and that money was Bitcoin, right? And then the choppers coming. We go under a viaduct and we come out, and now we driving Ethereum, right? Because it's moving fast. The other car was running out of gas. And then we ditched that car, and now we're driving Solana. We're driving a Solana. And then Solana starts slowing down. I ditched that car, and then now I'm driving SUI as an altcoin. Follow? And it's just the fastest moving car right now. All right. What else? I'm going to cut this. Chase. Yeah, we're not getting this. Listen, we going to make money, period. Yep. Affirm. I'm killing it on Affirm. I am absolutely killing it on Affirm. And I told you guys about Affirm. Pay as you go is doing well, but my Affirm is, what is that, AF? I bought a little today. I bought a little more Affirm today, but man, look at Affirm for the month. Man, Affirm is killing it. Yeah, Affirm's going to do well. Affirm's with the small caps. It's in my small cap ETF. Yep, I keep buying. A Palantir and Affirm, I keep buying those. Palantir, SoFi, Affirm, I keep buying those. They're all of them going to outperform where they're doing now. All right, and Roblox. I bought it when they did the hit job. Remember what I was telling you guys? I didn't trust that hit job on Roblox. What is that? BLX? Roblox. I don't know how it's going to perform, but remember, told you guys I bought some Roblox, and I'm going to keep buying it. Yeah. Let's see for 6 months. Look at that. I keep buying it. Even with a hit job, I keep buying it. Yep. It's going to be, it's performing well. XRP, nah, we already covered that. Tesla just hit 300. Did it? Or are you pulling my leg? TSLA. Oh, wow. Tesla's dancing, man. Look at Tesla. Yeah, Tesla's dancing. Look at that. Yeah, Tesla's doing this thing. My Tesla portfolio. How many of you guys, your portfolios, you looked at your portfolio yesterday and smiled? Woke up again this morning, looked at your portfolio. For the last 3 days, I just woke up and I keep hitting refresh. And I'm going, where's all this money come from? That's because you and I have been doing the hard work. We have a plan. When do you think is a good to be the pick? I don't understand that question. You must have left something out. Before the end of the year. I don't know if it's before the end of the month. Before the end of the year, I think, yes. You know, whether it comes at the end of the year, end of the month, it doesn't make me any difference. You got in crypto back in 2021. Just wanted to confirm based. Nah, okay. No, I don't know where you're getting that from, bruh. I'm doing extremely well in my stocks, but my crypto is killing it. So I don't know what you're talking about, crypto mom, but I got big bags of my crypto. So I don't know where you get that from. Okay. Now I will tell you this. I'm doing better as an investor than I'm doing it as a options trader. That I will tell you. I'm doing better there, but my crypto, I sleep well on the positions because I got in early, right? So I don't know where you coming out with that. And I've led a lot of people to make money with crypto. If you got into crypto following me, or if you follow some of my plays and you're making money on some of my plays, and it was some of the plays that you really didn't know about, or you weren't going to make that decision, leave me a coffee cup. Just leave, you know what, put a number 1 in the chat. Just put a 1 in the chat. Just put a 1 in the chat. So what you can't do is you can't roll here with the page and then go away for 3 months and then come back, right? Because we've been making a ton of money with crypto, and we've been making it all year. Even back in January, we were positioning ourselves, all right, for the halving. Remember, I went live for the halving. I've been telling you guys constantly what I'm buying, how, and how I'm structuring my portfolios and when I make moves. Even the stuff that I'm selling and rolling over, I'm green in. I just stay in the fastest moving car. So you can listen to these guys that sound better than me, look better than me, and they just whip all of these charts. At the end of the day, I'm making good money. Listen, I've been DCAing. I've just been DCAing in SUI, and then when it dips, I just buy. That's it. I just been DCAing, and it just keeps going, right? If Bitcoin is going to keep going up, so will Solana, so will SUI, so will Ethereum. But in this segment, SUI's been outperforming Solana. I think SUI, and then Solana, and then Ethereum. When do you think is going to be the pick? I don't understand what that meant. Oh, I'm rolling. Hey, how you doing? What's up? How you doing? I'm up handsomely in Bitcoin. You guys remember, I bought mine, I was buying at 20. So I'm up handsomely in Bitcoin with all the Bitcoin I got. And I'm going to hold it until, I'm not going to say I'm going to hold it until. I'll let you guys know when I make my moves. But one day Bitcoin, one Bitcoin, I believe we got to go entirely through 2 more cycles, 2 more, 4 years. And by that, the next cycle after that, I believe one Bitcoin will be, that's what, 12 years? So 4, 8, in the 10th year, I believe that Bitcoin will be, by then, one Bitcoin will be $1 million. That's what I think. Okay. Right. Yeah, the market don't care about your bills. Yeah, SUI has times when they pull back, and SUI will probably pull back. That's why I wouldn't just dump all my money in, right? It's not a good thing to do. You see that? Look at that. Up 13K for the year. That's what I'm talking about. And then we're going to start talking about exit plans, okay? Hey, thanks for the super chat. DraftKings stocks. I don't know, but I noticed my DraftKings came up. It got a hit. It took a hit when the government was talking about doing it, what they were talking about doing. When do you sell Tesla? My Tesla, I'm not selling. So that's up to you when you're going to sell Tesla. It's not a we. It's when do you sell Tesla? I ain't selling mine. So you sell yours because we all didn't get Tesla at the same price. Okay. So I can afford for Tesla to cool back off, and then I'll buy more, and then I am going to rock with Tesla for at least the next 4 years and continually the DCA. Here we go with the ones. Look at all of these ones. I was so far back. Look at this. Bro, talking about we ain't making no money. He don't. Bro, people come, Johnny, listen, research before you react. Don't come over here. We got receipts. Because I don't just do it. I come to you guys and talk about it. That's what I do. Yep. People making money. This is what brings me joy right here. You see all these ones? They making money, and that's what I want to do. And am I a guru? No, I am not a guru. Am I always right? Absolutely not. But I know how to make money with stocks and crypto. TMF is not my thing at all. At all. Don't understand it, never bought it, and never gonna buy it. It's just not my thing. There's money to be made in it. That's not my thing. Would you make a video about how to handle the bull market so we don't forget to sell? You know, I always talk about that. You know what though? I get more hate when I talk about it's time to sell in a bull market. Just like in 2021 at the top, after we made a killing. And you guys saw what I did with Shiba Inu. You guys saw the money, life-changing money I made with it. And as soon as I said I was going to sell it, that's when people lost their minds and called me an idiot. And then it turned around and fell all the way back down. Yep. Yes. There we go. There's the course. Yep. Uncle Larry. You see this? Cody. Sure did. Cody, I remember you. Yeah. Hey, Code. Yeah. This is pretty. It's a lot of money out here. That's it. And I'm not the only, and I'm not the only one. No, I'm not selling. And I'm not the only one, good people. I'm going to say this in closing because this has been long. I've been on here. I'm going to say this, man. It's a lot of good content out there. And don't limit yourself. Like I went to, who was it? It was one of the guys in the squad, right? And somebody came to my page and he said, man, I only rock with Larry. I only listen to him. He the only one doing this. And none of these other guys are doing that. And I ain't let that get into my head because I ain't falling for the okie doke. Man, I've been around the corner. I was like, right. And then I go to one of the other guys' page. Same dude saying the same thing. I only rock with this one because he, listen, that's a fool's trip. I'm sorry. This is the way if you can't take that language, I'm sorry. That's a fool's journey. Because I'm going to talk about some stuff that they're not going to talk about. I'm going to talk about stock that ain't even on their radar. But guess what? They going to talk about stock that's not on my radar. And so why wouldn't you listen to multiple people and multiple channels and get the best of what everybody offers? That's all I'm saying. So please don't come over here saying nothing stupid like Larry's the only one I listen to. I would tell you cray cray. All right. Unburdened. Isaac being nice. See, I like Ice. Ice cut. I am unburdened. Have been for the last. You being, see, I can take that. But some of this hateful stuff, no, I like that. Yeah, man, Randy, I want to keep it real because at the end of the day, I want people to make money. I want people to make money. That's it. That's it. I can tell you this. I haven't seen too many people on this platform that I make money. I have businesses, but that's not my main purpose. And I'm going to tell you right now, I keep saying I'm closing. These crypto brokers, and there's one, a leverage thing. They've offered me ridiculous money. Ridiculous money. I could have made $400,000 in just a couple of months, and I turned it down. Why? Because I teach against leveraging. Okay? You got to be a professional to do leveraging in crypto. And I turned it down because I'm not selling you guys out. Now, do I like making money? Yes. Do I like launching businesses? Yes. But after me being set up, what brings me the joy is when I travel all over this world and you guys say, you've helped me to make money. Many of you, I've met many of you at conferences. You came to my conference and I come to your cities. I did the 10-city tour. And when you show me your portfolios and you've listened and you've learned life-changing money, grown men crying. I mean, men that came out of prison talking about you changed my life. That's priceless. I'm gonna tell you that. That's priceless. And that's what does it for me. That's what does it. That lets me know I'm serving my purpose. Yeah, the hate is gonna come. Let them hate. Hate is gonna hate. The great prophet, Taylor Swizzle. All right. Look at that. Love it. You up 2,009% on Palantir. What do you think? Letting go of NEO due to the election. I don't know what your buy-in price is, and I'm very cautious on telling people to sell. But Chinese stock right now are not doing well, and because President-elect Trump is going to be the next sitting president, you guys got to look at some of the things that have benefited. Banks have benefited. Mergers and acquisitions, M&As. You notice anything that had a merger or an acquisition just popped on yesterday. Companies that make concrete has went up. Companies that make steel, Cleveland Cliffs with the concrete and steel, that has went up. Those have went up. Big tech has went up. The overall stock market has went up. Bitcoin, he came and spoke at the Bitcoin conference. So just think about your money. And if you want to take some profits and roll it into something that's going up, that's a good deal. Me, I don't keep any Chinese ADRs. I don't keep them. I trade them. I'm in, I'm out quick. And that's including Alibaba, Baidu. Now, I'm not telling you to do it, but that's just me, right? Tesla and Nvidia for 10 years. Yeah, man, that's a solid. Yep. Yeah, I know what you meant. Yeah, I know exactly what you meant for the. Yeah, but just think about this. Even if you took your NEO, even now, and put it into something that is less risky, and you make money in that, while NEO is just doing this because of the election results, that's still a smart move. Now, I can't tell you what to do. I'm just telling you how to think about your decision. ADA's last year. I don't have 1 ounce of ADA, and haven't since 2022. Yep, that's when I tapped out of ADA, and I ain't coming back. After $100, because I think it's going there. Not because I want $100, because I think it's going there in the next 14 months. Appreciate that. It's just a lot of study. That's all. I appreciate it. And then I was here all during the bear market. I was here. Yep. TMF is, thank you. Yeah, ask him. I think you mean Bonk Coin. So that you can buy that on Coinbase. So for those of you that have the Webull app, I just showed you guys. Webull, you can buy PEPE on Webull. Now, let me say this, and this time I promise you I'm going to leave. This is a long video. I just bought some PEPE while the Fed was talking on Webull Pay. If you got the Webull app, I just got it on Webull Pay. So remember, Webull Pay, and then I just bought $100 worth of what? PEPE, right? Now, who remembers 2021 when Webull started listing a meme coin called Shiba Inu, right? They had it before Coinbase did, before the run-up. Webull had Shiba Inu before Coinbase did, before the big run-up. Okay? Now, I'm not saying PEPE is going to do that, but it's following the same path. Good people, every single time I come on here and talk about stuff like this, there's money to be made. All right? I love you guys. For those of you that are new, we talked about the coffee, $1 million cup of coffee, and we talked about what we're going to do with it. And so when I launched the 12-ounce bags, all of the proceeds, I gotta end it before Christmas, because I want to give all of the proceeds to children. Now, it may be I work with a community center in Chicago, and I'm going to see what programs that will be suitable for that. I also work with another program at kids that have lost their parents because of violence. You know, their parents were murdered, stuff like that, and they really have a hard time during Christmas. I work with Early Walker with that. I may do that, where we buy gift cards and we take them to go shopping. But we're going to put it to work, and that's what we're going to do. So that's what we're going to be doing with $1 Million Cup of Coffee. That's what brings me joy. It's my thing. All right. And I'm going to say this. Next year, I will be starting my own stock club. It will be my version of a Patreon. It's going to be $1 a day. It's only going to be one tier. And it's not going to be $100 tier. Ain't going to be a $5 tier. It's going to be $1 a day. I'm just telling you guys right now. And it's not going to be all about the hot plays and all of this. No, I'm starting from the beginning. I'm only going to be on there Monday, Wednesday, and Friday. And if it's not for you, don't come over. All right. It's not about the hot option play of the day, but we're going to discuss stocks. And I'm just going to tell you guys what I see for the week, that type of deal. And then what we're going to do is we're going to move, probably by the second month on the Wednesdays. Wednesday is going to be teaching Wednesdays. OK, so what we're going to do is we're just going to start pulling up charts, and you and I are going to learn together. And then for 1 month, we're just going to trade candles, right? And then the second month, we're going to trade with candles, and then we're going to add another indicator like the RSI, Relative Strength Index. And then we're going to trade for another month with those two. And then the third month, we're going to put in the MACD, right? And we're just going to take our time. We're not going to be in a rush. And if you just want the 10 hot plays a day, it's not the place for you. Don't even come. And we're just going to have a community. I don't care if it's 5 of us. I don't care if it's just 500 of us. It's just going to be 500 of us. And this is going to be for people that don't know options. Okay. And we're just going to build portfolios together. And that's what we're going to do. It's going to be my stock club. That's my Patreon is going to be. It's going to be different than anything else that's out there. I'm just telling you what I'm doing. I'm not asking for anybody's advice. That's what I'm going to be doing, right? All right. All right, good people. Love you guys. Live, love, laugh, and learn. God bless you too. Peace.